He had two successful exits before this one. In MyTrade, he raised about 400, 500 grand, which just diluted him. He sold that to Ameritrade for kind of a good amount. Everyone got a healthy return, but they stayed there for 4 years. So obviously part of it was a acqui-hire as well. They really wanted that talent. Once they earned that, they spun out LikeFolio, which is, again, doing sentiment analysis across tweets in a marketplace that basically helps investors make decisions about kind of different investment criteria and what the next big wins are and kind of trend analysis. They've got a team of 4 down in Argentina doing that analysis. That's the engineering. Another team of 4 or 5 there in Kentucky, again, focused on bootstrapping and building this business, staying lean, serving, that sector of 30 to 50 of the big quant guys. Those are our annual contract values, 200, 300, 400 grand.
This is The Top, where I interview entrepreneurs who are number 1 or number 2 in their industry in terms of revenue or customer base. You'll learn how much revenue they're making, what their marketing funnel looks like, and how many customers they have.
I'm now at $20,000 per top.
5 and 6 million. He is hell-bent on global domination. We just broke our 100,000 units sold mark.
And I'm your host, Nathan Latka. Many of you listening right now don't have time to listen to every B2B SaaS CEO that I've interviewed. If you want to get access to the database I've created with year-over-year growth rates, customer accounts, margins, and many other data metrics and data points, you can go to getlatka.com. Here's the thing, though. That database, I keep it to myself. It's so freaking valuable. And to preserve the quality of the data and make sure that the people that have access to it have a true advantage, I'm only letting 10 companies on each month. So we're full this month, but you can go to getlatka.com to get on the waiting list for next month. And look, there's big people on the waiting list. I mean, the biggest VCs you've ever heard of. You've probably heard of them. They're big, private equity, billions and billions under management. So it's an impressive waiting list. Go get on now at getlatka.com. This is episode 775. Coming up tomorrow morning, the CEO of Texting Base shares his margins, his cap table structure, his valuation, and more. Hello, everyone. My guest today is Andy Swan. He's the founder of a company called LikeFolio. The company uses social data to determine shifts in consumer behavior on Main Street before it becomes news on Wall Street. This is his third financial technology company. The second, MyTrade, was acquired by TD Ameritrade in 2007. Andy, are you ready to take us to the top?
Oh, yeah.
Okay, so let's go back real quick and get some history. So 2007, MyTrade. What did MyTrade do, and why did you decide to exit it?
MyTrade was basically it was a Twitter geared directly towards options traders and very active stock traders. And we developed a technology that allowed people to, with one click, copy another person's very complex options trade, which made it a lot easier for people to share what they were doing, to learn about options trading, that sort of thing. And so part of the reason that we sold was because basically the service, MyTrade itself, was fairly useless without a brokerage backend. And so we developed the technology. We had a long-standing relationship with TD Ameritrade's subsidiary Thinkorswim, and it pretty much developed it with them in mind, and so it worked out well for us and for them. It's now probably the number 1 stock trading and options trading community in the world.
And what did did you decide to bootstrap that company, or did you raise capital, or what?
We raised a little bit.
What's a little bit?
500,000 or 600,000.
Okay.
I don't think that we ever really tapped into that money because we sold the company like 3 or 4 months after raising. So really, we just diluted our own ownership, and kind of a lesson learned there. But
why'd you do that if you knew the sale was coming? It sounds like you were building this the whole time in mind for Ameritrade.
Well, we didn't know that the sale was coming. We thought that there was a good opportunity to at least partner with them. We did not know that they would jump on the idea of acquiring it. But, so we raised the money thinking, all right, this will get us 12 to 18 months worth of capital to build this out properly. But, they kind of acquired us right out of the starting gate, which we did not expect, but it turned out to work out well.
And what'd they acquire it for? What was the price?
Not going to disclose that. It was, not not Instagram numbers, but it was nice.
I mean, it sounds like if you're going all in on a customer like that, and you were also dependent on a backend or a brokerage like what they had, I mean, should we look at it? I mean, did you stay with the company after they acquired you?
Yeah, we stayed on for, I think it was 3 or 4 years.
Okay, so I mean, you could probably potentially look at this almost like an acqui-hire, but there was still some good return for you and the investors.
Yes, for sure.
Yeah.
Sure.
Okay.
And then that's from there, we spun off after 3 or 4 years under that corporate umbrella. Both parties decided that, myself and my brother, who's my partner in all this stuff, would be better off, and everybody would benefit more from us being separate. So we spun off, created our own company with the idea of LikeFolio in mind from the very beginning. And TD Ameritrade has been a partner of LikeFolio from day one on that as well.
Mm-hmm. Okay, got it. So
we could continue the relationship.
Yep. So tell me now. Let's now transition into LikeFolio. So you left, or you developed the technology while you were still earning your earnout or your 4 years at the other company, or was it a completely new company?
No, completely new company. We left and developed the technology after leaving.
Okay, got it.
We had the idea when we left. Yeah.
And how does so let's go kind of backwards to then current time. What is LikeFolio and what's the revenue model? How do you make money?
We sell insights on consumer behavior to professional investors and to companies. And so we take in we have a partnership with Twitter. We take in every tweet that is mentioning a brand or product that's owned by a publicly traded company. And then we analyze all those tweets for sentiment. Most importantly, purchase intent. Is the person tweeting talking about buying the product or service? And then over time, we can map those trends. We can graph those out. We can look for big shifts in consumer behavior and say, alert to our professional clients, look, you might want to take a look at Weight Watchers. It is, we're seeing a lot more people talking about subscribing to Weight Watchers this quarter than in prior first quarters of other years. We think there's something big there. And so we sell that data to hedge funds, quant funds, and that's how we make a buck.
And how though? Like, is it a one-time fee kind of per report pulled, or is it a monthly subscription service per API call,
No.
like a usage model? What is it?
Yeah, we have several different layers. So some clients don't have the ability to take in, an API fee. They don't have the computing power, and so that's we call LikeFolio On-Demand. It's a subscription service monthly, around $2,000 a month. And then for quantitative funds that do have extreme computing power, we have a very robust API that they can subscribe to that runs anywhere from $100,000 to $300,000 a year.
Okay, and which of those two models makes up more of your revenue?
The API.
Oh, okay, got it.
Yep.
So you very much kind of have this 80-20 rule going on, where these companies that are smaller, that don't have the computing power, they can get in at $2,000 a month to kind of start a relationship. But ideally for you, the way you make the most money there is if they mature and make more money, get the computing power, and then convert to a $200,000 or $300,000 annual customer.
Yeah, that's true. I would also say that, to be fair, we just launched the LikeFolio On-Demand model, where we're servicing these smaller boutique type of hedge funds. And so it could turn out, because there's so many more of them, there's 10 to 13,000 of those, whereas the quantitative funds, there's maybe 30 to 50. So it could turn out to be the bigger piece of our revenue in a couple of years. I'm not sure.
What penetration do you have right now? It sounds like it's a small market, 30 to 50. How many of them are paying you right now?
We do not disclose that ever. In fact, what's really crazy about this client base, we can't give testimony, we can't share testimonials, we can't share usage numbers, because every contract that we have with these clients is buttoned up and so secure, we're not allowed to disclose even that we have a relationship with them. They're a very secretive bunch, and it's one of the more challenging things about this is kind of going out to market without being able to tell how others are using the product or that they're happy with it is tough.
Yeah, just to be clear, I don't want names when I'm asking for names, but you already said that market is 30 to 50. So are you serving 10 of them? Are you serving 15? I don't know which ones or even what you put in that bucket, but based off your definition of the 30 to 50, how many are using you?
Again, I'm not going to disclose any numbers at all.
Okay, well, why not?
Because again, the penetration we have in the market is something that we hold very close to the chest, mostly because this data has a certain amount of alpha, which is the benefit that the
it's more valuable the less people have it.
The less people that have it, the more valuable it is.
Yeah, so this is exactly where I was going. Why would you then release it on a much cheaper $2,000 per price thing to 13,000 potential new customers? It makes it way less valuable to the people that are paying way more.
No, it doesn't, because it's a completely different product. The people that are using it on an API level, they are trading algorithmically, not fundamentally. The hedge funds that are looking at it and are pulling reports are looking at on a multi-year level, completely different time frame, and are using it for very different reasons. So the two are very separate in terms of the impact on alpha.
Got it. And then what is your, kind of from a historical perspective, you launched the company. Have you decided to bootstrap it, or have you raised capital?
No, we have not raised capital and don't plan on it. This is something I want to own all of.
Okay. Someone else might look at that and say, well, maybe they just don't understand how to spend money to acquire new customers. Otherwise, you try and raise capital to fuel that growth. Which is it?
No, it's that I want to own it all. I have the money to spend to acquire customers.
Okay, got it. But some of the folks I imagine you're working with, like you mentioned, one of your partners, I think, is Ameritrade or whatever the back end is. Some of the folks obviously would be strategic in terms of doing that. Why make the decision not to pursue those kind of opportunities?
Honestly, I just don't want to have anyone else having a say in how our company is run. I want to own it all. I want to be the captain of this ship and not answer to anyone, even on a minority basis. I've been down that road. I've had 2 successful exits, and I feel like entrepreneurs, generally speaking, if they have the capability, are better off without external capital.
And are you referring to, I assume, MyTrade, and what was the other one?
The other one was called Daytrade team. We sold that in 2006 and to a private investor and private equity, and that kind of got us going a little bit. It was not a huge deal, $2 or $3 million, but got us on the road to understanding how to build a company a little bit, and it put us on the map in the financial sector.
And why do you feel like it sounds like because of the advice you just gave, you're not going to raise capital? How did kind of money raised in that first deal hurt you guys?
We did not raise money in Daytrade team at all. MyTrade, we did. We didn't use it, and it diluted us. But I think that staying focused and staying lean and staying focused on the product that you're delivering to customers rather than how much or how often you're marketing to them is the better advice, especially in the first 2 to 4 years of a startup's life. I think too many entrepreneurs are trying to go too broad too soon, and the product suffers. They get too much capital. They hire too many people, and then you're kind of one blip away from not having even the ability to pivot, which I think is pretty dangerous.
What are you guys at now in terms of team size?
There's 4. We just hired our 5th person in the Louisville office, and then we have a team of 4 people that have been with us in Argentina on the tech side. Same group of 4 has been with us for 3 years down there.
So are those 4 people, one of the big questions I had for you is analyzing actual sentiment. So let's say you saw a bunch of tweets about Weight Watchers. How do you actually analyze the sentiment to distinguish between someone saying, I will never buy Weight Watchers versus I'm about to buy Weight Watchers?
So that's a great question, and it's one of the toughest things for us to do. So in that example, the word never negates everything else in the tweet. And so, that would actually come up as negative sentiment.
So what if, though, Andy, that same thing said, I could never live without Weight Watchers?
Right. That would come up as negative sentiment as well. So that would be a miss on our part. And we do have misses, about 2 to 4%, depending on the company, of our sentiment, where we register a sentiment, positive or negative, is a miss. And so, that's noise in the data that our clients have to deal with that we disclose very well. But we audit, we take a sample of about 1,000 tweets per company per month and take a look at, at any of the misses that we find, and we try to correct for that. But there are some that are just going to be misses. There's some sarcasm that's going to be missed. We try to get it as good as we can, but it is certainly not perfect.
Guys, big news. Last month was a huge month for the company I recently acquired, which was www.thetopinbox.com. I liked the company so much when I met the person who created it. It lets you send emails later on Gmail, set up reminders like snooze almost to keep your inbox clean, do things like send auto follow-ups, and do open tracking so you know when your emails get opened. It's great if you're in sales or CEO or trying to be more productive. So listen, I bought the whole company on the spot, and I want to tell you how I did it. I've showed the deal, by the way, to big, smart people, private equity firms, VCs, and they're dumbfounded. They go, Nathan, how did you do this? We've never seen a deal like this. How did you do this? So I did an unbelievable deal, and I want to show you the income report. So for me to send you the income report, go to www.thetopinbox.com. Click the red button that says install this on Gmail. And when you do that, my email will appear. It'll appear in a little Gmail pop-up window. Send me an email and I'll reply immediately with the income report. And you can see how I'm buying and growing small B2B SaaS companies. That's www.thetopinbox.com. Totally free to try and use. www.thetopinbox.com. Yep. All right, Andy, let's wrap up here with the famous 5. Number 1, what's your favorite business book?
Think and Grow Rich by Napoleon Hill.
Number 2, is there a CEO you're following or studying right now?
Jeff Bezos' every move.
And number 3, what's your favorite online tool, like Acuity scheduling?
Favorite online tool? I just use Gmail. I don't really use too many online tools.
Number 4, how many hours of sleep do you get every night?
Say 6.
And what's your current situation? Married, single, you have kids?
Married with 2 kids.
Oh, nice. And how old are you?
I am turning 40 in 2 weeks.
A very happy early birthday. Last question, man.
Odometer's over.
Last question. Take us back 20 years. What do you wish your 20-year-old self knew?
I wish my 20-year-old self knew a little bit more patience. I think it's, especially as an entrepreneur, I see so many people just kind of right as they're about to succeed, they've lost their own patience and they're 2 or 3 years in, and really it's that, I think, 3rd to 5th years where successes are made, and there's too much hype about overnight successes. It takes a lot of patience to do this right.
There you guys have it from Andy Swan, founder of LikeFolio. Patience is king. He had 2 successful exits before this one. In MyTrade, he raised about $400,000-$500,000, which just diluted him. He sold that to Ameritrade for kind of a good amount. Everyone got a healthy return, but they stayed there for 4 years. So obviously part of it was a acqui-hire as well. They really wanted that talent. Once they earned that, they spun out LikeFolio, which is, again, doing sentiment analysis across tweets in a marketplace that basically helps investors make decisions about kind of different investment criteria and what the next big wins are and kind of trend analysis. They've got a team of 4 down in Argentina doing that analysis. That's the engineering. Another team of 4 or 5 there in Kentucky, again, focused on bootstrapping and building this business, staying lean, serving, that sector of 30 to 50 of the big quant guys. Those are our annual contract values, 200, 300, 400 grand. And they just launched a new product where you can kind of get LikeFolio On-Demand if you're a smaller company for, call it $2,000 per month. Andy, thank you for taking us to the top.
Thank you. Have a good one.
If you enjoyed Andy today, go back and listen to Chase yesterday. Chase founded Creative Live, and I was curious. I said, Chase, if LinkedIn offered you $200 million, would you sell?